We've had multiple investors right here on the exchange tell us that wages are the number to watch. In fact, just this week, one said that a drop in wage growth is the one thing that would get him bullish again. Well, he's going to have to stay bearish for now, though, because Recruiter.com is reporting an increase in salaries of 38% in December from the previous month. Let's ask Evan Sohn about this. He's chairman and CEO of Recruiter.com. Evan, do we have that stat right? Wow.
I know we were pretty surprised about it, too. The other thing we saw, and thanks, Kelly, for having me back on the show, was an increase in the recruiter sentiment from November to December. Out of a 5, it went from 3.3 to 3.6. So there certainly is optimism among the working recruiters. The other thing that was really interesting is that 25% of the roles that the recruiters were working on were in that $40,000 to $80,000 range. So not the high-end, that high-end worker, but that $40,000 to $80,000 salary. So we're certainly seeing that pressure on the overall salaries themselves as recruiters are being used now to go fill those roles.
Sure. And so there's been all these layoffs lately. I mean, even just now, it's one after the other, it feels like in the inbox. But can you put those in context for us? Do you see them spreading, picking up pace, broadening out? Or is this as we've talked about some of your colleagues, a white collar recession where there's different segments of the job market behaving very differently?
Thanks to our partners over at Revilio Labs, we've been tracking layoffs and who's coming next in layoffs. And while over the last 2 months, we saw a 200% increase in reported tech layoffs, we saw a 100% increase in facilities like warehousing and in mortgage brokers, mortgage lending. So there's certainly looming recessions affecting other industries as well. Those sales roles are actually where we're seeing that segment actually pick up in terms of the overall demand for sales roles. And the sentiment among candidates in the sales for sales candidates is actually more optimistic than other sectors.
Wow. And again, the warehouse layoffs are certainly a sign that it's going to be a blue collar. It's going to affect all parts of the income spectrum at some point. So as we this is the eve of the big print tomorrow morning. What do you think are the biggest takeaways for investors from your data? And what would you tell, I don't want to call it a warning, but what would you tell people to be watching for?
So look, the other thing that we saw is that there were no recruiters in our index reporting that they're working on new open roles, that they were all working on backfills. Now, these could be backfill roles, meaning roles that were left empty by someone leaving, quitting, voluntary quitting, et cetera. So that would point to not seeing a very large new number. However, you're also seeing recruiters working on those $40,000 to $80,000 salary roles, and that really shows the seasonal, the more transportation-oriented, the healthcare workers, and we're seeing those numbers. So there are still lots of open areas. It's a very, very tight market, which is why the recruiter sentiment is so high.
Lots of open roles, fewer new roles maybe, and we'll parse it all out as we get that number in the morning. Evan, great to check in with you. Thank you so much.